Thank you all for attending this session of our webinar series today at Cashflow Champs. It is our intention to bring you good content on a weekly basis, develop good relationships with you, and to be a resource for you in the multifamily real estate space. Today, we'll be covering the topic how to get your first multifamily syndication deal done. So this should be fun. So before we dive in, let me just take a minute to introduce myself and to take care of some housekeeping duties. I am Paul Sr., one of the managing partners with Cashflow Champs. I am married and live outside Washington, D.C. with my wife and 3 children in Prince George's County, Maryland. And our team at Cashflow Champs has a portfolio of about 146 million assets under management with a little over 1,600 doors. So to get some information, more information about myself and my team, you can just simply go to cashflowchamps.com and you can hover over Meet the Team, and you will see our team members there and just a little bit of information on our team. Also, if you scroll to the top of the page, on the right-hand side, you can schedule a call with us. So you can absolutely go there, schedule a call, fill in your information, and somebody from our investor relation teams will be back in touch with you. So, take a minute to do that. We also have a free underwriting session in terms of resources. Well, also I'm co-host of the Cashflow Champs Real Estate Podcast. Just want to let you know that. And in terms of resources, you can get some resources from us. On Saturdays at 4 p.m., one of our managing partners, Charles Seaman, he does an underwriting session where he delves into the T12 rent roll and underwrite the deals. And you can see how we underwrite our deals. And you can share the platform there with other folks. We also have the Cashflow Champs Aristocrat coaching program. And that coaching program is a paid program. And there we're teaching individuals how to also be syndicators, how they can also partners with others, and we can show them how to scale their portfolio in case that's something that they want to do. Thirdly, cash flow. So in terms of connecting with us, you can scan these QR codes here, and you will be able to get some more information on that. We have a summit, virtual summit, that's also coming up in November, and would like to invite you to that as well. And so we had one last year, which was a great success. And if you go to cfcsummit.com, you can still see 2022 recordings there. You can also get that. The one for 2023 will be November 17th, 18th, and 19th. So feel free to sign up there, and we can we'll be glad to have you. All right, so that is it in terms of housekeeping duties. So let's get into the topic for today, how to get your first multifamily syndication deal done. All right, so if you have any questions as we go through the presentation, you can put those into the chat or the Q&A at the bottom, and then we will answer those as we go through. And also, if there's any leftover questions, we'll take care of those at the end. All right, to keep the attorneys happy, let's read this disclosure. Disclaimer: I am not an attorney, financial advisor, tax advisor, or an accountant. The purpose of this webinar is for information purposes only. So you want to seek advice from the appropriate personnel. All right, so what we will cover today in the webinar is we'll cover in the webinar today some multifamily syndication basics. We'll also talk about some steps for your first multifamily syndication, specific steps you need to take, and steps from the PSA purchase and sales agreement to closing the deal, and just different ways that you can get involved in a multifamily syndication deal for the first time. So maybe, excuse me, the best way to get started is just to cover some basics as it pertains to multifamily syndication. So what is multifamily syndication? Well, multifamily syndication is a type of real estate investment in which a group of investors pool their capital, their resources, and their expertise to purchase a multifamily property, such as an apartment building. So for multifamily syndication, there is a group of investors who are actively executing the business plan for the deal and overseeing the operations of the deal. So those are referred to as the operators, while you have another set of investors who are more passive, providing equity for the deal, and in turn, they receive monthly distribution and also an upside on the deal at exit. And these are our passive investors, right? So you have the active investors who are actually handling the deal, and you also have the passive investors who are also partners in the deal as well. So the multifamily syndication model allows for the operator to raise equity that is required to close the deals from the passive investors. Now, there are SEC regulations that must be followed when raising capital for your multifamily deals. Rules 506B, as in Bravo, and 506C, as in Charlie, of Regulation D are more relevant to multifamily syndicators like ourselves, right? So you want to be aware of these rules and act accordingly to stay in compliance with the SEC. So typically you have a database of people with whom you've built a substantive relationship over a period of time, right? People who know you, people who like you, people who trust you. And these people trust you so that they invest their monies into the deals or the opportunities that you present to them. So these investors will be looking for a minimum specified return on their investments. So you as an operator have the responsibility to go out and market and find those type of deals that meet and exceed your investors' expectation. So in a nutshell, that's what multifamily syndication is all about. It's a group of investors pooling their capital, pooling their resources and their expertise to purchase an asset. And in our case, it's multifamily properties to make a profit on investment for the investors, right? All the time, they're still following the SEC rules that are in place relevant to raising capital. So the multifamily syndication model tends to work best for multifamily properties that are 75 units and more. So at about the 75 unit mark, you start getting enough economies of scale where you can hire a full-time staff to run your property. So maybe you can hire one leasing agent, and you probably hire a maintenance tech, at that point. At Cashflow Champs, we focus on properties that are 100 units and more, and therefore the syndication model is what we use in our deal. So now let's touch on some specific steps that you must take in order for you to get your first multifamily deal done. So you must have specific criteria for your first multifamily syndication deal you want to purchase. And the first specific criteria is choose your market and submarket for the deal that you want. This is simply the geographic area where you'll buy your deal, right? So markets are often referred to as MSA, Metropolitan Statistical Area, which is a large urban area like Atlanta or Dallas, LA, maybe DC, Washington, DC. And then a real estate submarket is a smaller component of the broader market. So for example, New York City is one of the largest commercial real estate markets, and Manhattan is a submarket within it, right? So your submarket is more important than the property itself. So you want to choose your market and your submarket well. It is much easier to make profitable a bad property in a good market than to make profitable a good property in a bad market. You see, I'd rather take a C-class property in an A area than an A-class property in a C area. So the steps in getting your first multifamily syndication deal done is to pick your markets well, and then go beyond that and pick the submarkets within those markets to focus on. Now, it is important for real estate investors to understand submarkets and their investment profiles so that they can maximize their chances of a profitable investment. Some of the indicators of investing in a strong real estate submarket includes your job growth, your population growth, high rental demand, and high medium household income, and so on. But in identifying strong submarket, it requires data analysis skills. A lot of time will be invested in studying the submarket and the ability to interpret the trends that's going on inside that market, right? So in a big country like ours, you can choose to do your first real estate syndication deal just about anywhere, from the West Coast to the Midwest, to the East Coast. You can choose if you want to be in the southeastern part of the United States or the northern part of the United States. You can choose any part in the country. The challenge is that you really don't want your search to be scattered all over and be random. You really want to get focused on a specific geographic area or submarket and grow from there. So in terms of criteria, you want to narrow your search from countrywide to statewide to citywide to the submarket of your choice. Now, some people will recommend you start in your own backyard, meaning a place that you now live and are familiar with. And I would recommend finding your first multifamily syndication deal in your backyard only if your backyard has the characteristics of a good submarket. A good submarket, again, is just one that has attractive demographic trends and also like positive job growth, growing population, a diverse financial base, right? You want to choose a submarket that has also landlord-friendly laws. Excuse me. And let me just place some emphasis on this here, okay? There are some regions in the country where the laws are very tenant-friendly. I mean, you can have a non-paying tenant in your property for months and you have to fight, tooth and nail to get them out. And for one, the docket in many jurisdictions is backed up for months, where if you file a non-payment of rent, you will not get a hearing on that case maybe until 6 months out. And to get the actual eviction is additional time. So in essence, you could be waiting close to a year to get a non-paying tenant out of a property. So just imagine dealing with this for, like, say, 10% of your tenant base. This could cause a real problem for yourself and also for your investors. So just being informed alone should let just this information alone should give you a closer consideration as to the type of market and submarket you choose to do your first deal, because the last thing you want is to be having a problematic deal as your first syndication deal. So just take those pointers into consideration. Now, our team at Cashflow Champs, for example, we like the Carolinas. We don't like North Carolina, South Carolina, Georgia, and Florida are the states that we tend to focus on. But within these states, we have chosen a dozen submarkets to focus on, right? And we have a team of 6 partners, plus we have additional outsourced help. So that's another thing, right? If you're operating solo, a one-man show, you want to focus on 2 or maybe 3 submarkets to get your first multifamily syndication deal done. Having a large number of submarkets to focus on will dilute your efforts to build good relationship with brokers, property managers, and sellers. So better to have a few deep relationship develop. And so when a property comes across the desk of these brokers, then they can think of you versus just having, wide, shallow relationship with brokers. Your next specific criteria for getting your first multifamily syndication deal done is to know the size deal you can close. One good indicator of the size deal you can close is determined by how much equity you can raise. So, for example, if you think, for example, that the most equity you can raise is $1 million, then you should be looking at deals probably between 2 and say $2.5 million, right? Or even 2 and maybe $2.2 million, because the LTV that you'll get from most lenders will probably range between 60 and maybe 65% LTV. So you're probably going to be raising about 35–40% of the equity on a particular deal. So on a $2 million deal, 40% of that, which is a raise, is going to be about $800,000. Plus you have to come with closing costs, which you can add another $100,000 for that. So you can see that on a $2 million deal, you probably want to, your raise is probably going to be about $1 million. So, if you think you can raise, $10 million, then of course you 10x the property size that you're trying to get. So you can probably look at property between $20 and $22 million. But it's very important that you kind of gauge the property you want to be involved with based on the raise that you can handle. So this is important when you're talking to commercial real estate brokers, because one of the questions a real estate broker is likely to ask you is, what kind of real estate deals are you looking for? And here you want your answer to be crisp, you want your answer to be sharp and be very precise with the criteria of your search. For example, you could say, I'm looking for deals in Durham, North Carolina in the price range of $20 to $22 million. I'm looking for B-class and C-class properties that has some value add, right? So you're very precise, you're very specific, and the brokers will know exactly what you're looking for, and that's the word you want to get out. So here's a general rule. You want to set your specific criteria and allow those criteria to guide the deals that you look at. For example, if your property search criteria informs you that you should be looking at deals at $5 million and less that are B and C class property, then when an A class property of say $15 million come across your desk, you should spend no time underwriting that property. You should spend no time evaluating that deal, right? Because you're simply wasting your time. It just does not fit the criteria that you know and have in place, right? So your criteria will help you to save time from looking at deals you should not be looking at. So when deals come into your inbox that do not fit your criteria, you should delete them immediately so you don't waste your time. Time is the most important asset, right? You can make more money, but you can't buy more time. So when the clock strikes midnight, that's it. The previous day is over, and you just got to protect your time and don't waste your time. So you really want to focus on good deals in your submarket that you can underwrite with expert knowledge of the submarket and submit LOIs, letter of intents, with confidence so that you can win your first multifamily syndication deal. You want to be an expert in your market where you know the price per door. That's what deals are trading at. You want a good handle on the cap rates in the different areas. You want a good handle on the rents for the different asset class. And you really want to have good command of what's going on in your submarket. But here's a challenge you might face as you seek your first deal. When you're starting off in the multifamily syndication or multifamily investing in general, many people get caught up in the shiny object syndrome. So someone will send you a deal from Maryland, for example, and you take time to underwrite it. Someone else send you a deal from Ohio. You take time to underwrite it because you're just anxious to get something going. Someone will send you a deal from Arizona, and you do the same thing. And before you know it, you're underwriting deals all across the country and nothing pans out. And this can lead to frustration. And sometimes people even possibly quitting being in the field because you really feel like there's no opportunity out there for you. But the point is, help you use your criteria so that it can help you to stay focused so you don't fall into that trap. Let me also say that multifamily syndication is a team sport. So if you're trying to do this, if you're trying to do your first multifamily syndication deal by yourself, I would not recommend that approach, right? It is just so much that you have to do, so many moving parts that you may be easily overwhelmed. So multifamily syndication is a team sport, and you should really approach it that way to be successful. So focus on good deals in your target market that you can underwrite with expert knowledge of the submarket, submit LOIs with confidence so that you can win your first multifamily syndication deal. Now, if you are awarded an LOI, you want to be sure to move swiftly to get the purchase and sales agreement fully executed as soon as possible. You don't want to have the deal locked up. Well, you really don't have the deal locked up until the PSA or the purchase and sales agreement is fully signed by all parties, right? So you want to make sure that you have that PSA signed so that you can take the next step in terms of getting towards your first multifamily syndication deal. There's a third specific criteria that I want to talk about briefly here, and that is work on building good relationship early in your submarket. You want to build a good relationship with brokers. You also want to build good relationship with property managers. When you're operating in the 100+ unit space of multifamily investing, commercial real estate brokers, they control at least 85% of all the properties sold, typically within any market, right? So you absolutely want to develop strong relationship with the top brokerage firms in your submarket, because this will give you the best chance of landing your first deal. At first, you may not get the time of day from these brokers, especially if you're a newbie trying to do your first deal on your own. But these brokers, they get paid by commission, they have a reputation to save. And so these brokers, they want to go with buyers who they have to know that they stand the best chance of closing that deal. So being a newbie, you may not get the time of day right away, but you have to be persistent. You have to do what it takes to appeal to these brokers. And that may include, taking them to lunch. You may have to pay for a round of golf. You may have to go skiing, whatever you have to do that they enjoy. That's what you want to do to help to build this relationship, because building broker relationship, is something that is very key in terms of helping you to scale your business. Well, we've done a webinar before on broker relationships, so you can always go to our YouTube channel and you can get some more tips there as it pertains to that. Now, local property managers are also key persons that will be a great resource to you in closing your first multifamily syndication deal. So you want to engage your property manager early in the process as well, where they can be most helpful. A good property management company can be an excellent resource, especially when it comes to underwriting. They can provide rental comparables that are very relevant to the market that you're in. So of course that will help in terms of making a better assessment in terms of valuation. They can also help in the due diligence process and help in the transition of the property from the current seller's management company to the new management company that will be running the property for you. And so those systems can get in place early. So we made mention earlier that the focus is on good deals in your target market that you can underwrite with expert knowledge of the submarket and submit LOIs with confidence so that you can win your first multifamily syndication deal. Now, if you are awarded an LOI, you want to be sure to move quickly. We make mention of that. Be sure to move quickly to get the PSA fully executed as soon as possible. You don't want a deal. You don't have a deal really locked up until the PSA is signed, like we said before. The PSA must be reviewed and signed by all parties. And you will typically receive a call from a broker, that the seller has accepted your LOI. So you want to bear in mind that the seller also reserved the right to continue to shop this deal around. So there are many buyers who have lost deals really at the finishing line because after receiving that exciting call from the broker, they just didn't act swiftly enough to execute under a PSA. And sometimes better offers come in the interim. So you want to be sure to act swiftly once you get your LOI so that your PSA is fully executed. So now we go over the steps from the signed PSA to closing, right? So let's take a minute to do that. Because here you are, you've been working on getting your first multifamily syndication deal done. You have chosen your market and sub-market. You've decided on the size deal based on the equity you can raise. You've built good relationship with commercial real estate brokers, property managers, lenders, and insurance agent, and you've underwritten dozens of deals and submitted several LOIs, and now you finally got an LOI accepted. Not only that, but you've gotten a PSA executed, right? So you're actually on your way to getting your first multifamily syndication deal done. So now that you have an executed PSA, what's next? Well, once you get the PSA signed off on by all parties, this will immediately start your due diligence process. So right away, you want to engage a lender. Now is when you engage a lender to determine the kind of debt that you want to put on the property. You want to work with the lender and all the loan documents and the lender closing checklist criteria for closing the loan. You also want to form your LLCs, right? You may want to form your property-specific LLC or your partnership LLC if those haven't already been formed. You want to also work with your attorneys on getting your operating agreement, your management agreement, etc. Right? Also, you must work with the seller and their team so that you can move the ball forward. You want to do your property inspection of the property, and you should really walk every unit of that property because you want to check out the physical condition of the property, right? You often will check out, you're going to have professionals on site with you, whether it be, plumbers or roofers or guys who know about electrical work. Because you want to check out the structural integrity of the property, both interior and exterior, so that you can get a good idea in terms of what you are buying. Another thing that you have to do once you get a fully executed PSA is that you want to audit the financials of the property. Not only will you check on the most recent financials the seller has sent to you electronically, but you will also check those financials that are on site as well. So you will be working with the current property management company to audit all those current leases. So you want to ensure that the current leases matches what was on the rent roll. Because if there's any discrepancy between the two, then you'll have to work on getting that corrected. So overall, as soon as the PSA is signed, you will have three main areas of focus. One, you want to engage the lender. Two, you want to reach out to your legal. Three, you want to start the due diligence process. And by due diligence, we mean both the financial and physical due diligence of the property. So in this period also is where you have your survey and title completed and sign off. Your lender property inspection report is also done, like your property condition assessment report. So if you'll be doing an environmental study, you'll also get that done at this point too. So the whole due diligence process typically takes about 30 days or so. Now, after the due diligence period is completed, you typically have another 30 days to bring the deal to closing. These last 30 days, you're basically just working to close the property. You work with the lender to finalize any documents. The lender's legal team and the operators, that's your legal team, will go back and forth just to address any and all issues for the sale. So maybe about 10 to 15 days away from the closing, your legal team will be working with the seller's legal team to get all the legal documents addressed for the sale. So the title company will become involved here to sign all the documents required to close the property. So in the last 30-day window, you will also be working with your property management company to get them ready to come and take over property management responsibilities on day one of closing, right? So as you can see, there's a lot going on here. This is why to operate efficiently and scale rapidly, you will need a team, right? Can you imagine one person, one solo operator trying to get all these things completed in a timely manner? It's almost impossible, right? So this exemplifies why teamwork makes the dream work. If you are a solo operator, you will likely miss out on new deal opportunities if you are so focused on exerting all your energy and effort on closing this one deal. So that in itself is a huge opportunity cost. And there are still more things that has to be done, right? Remember now that you have to raise equity for this deal with all that's already going on. Now you have to be contacting your investors. You got to be doing webinars to attract new investors. You got to get your private placement memorandum, your PPM, to your investors for signature. You got to be setting up bank accounts for operating the property so investors can wire their funds and so on. So there's a lot that's going on here. So typically, when you get a deal on the contract, you want to send it over to your investor base, have a webinar about the opportunity where you can answer investors' questions, and you want to be given some type of a funding deadline to your investors so those who are committed to invest in a deal can do so in a timely manner. So you want to get all the funds in to close the property prior to the closing date. Ideally, you want to get all the funds to close the property in the first 30 days during the due diligence, right? So you want your closing to be smooth. You want your closing to be trouble-free. That is the goal. That is the objective. And there you have it. I mean, your first multifamily syndication is really in the books at this point in time, right? Once you go to closing, it is in the books. So this whole process can tend to become overwhelming, and especially so if you're doing this thing solo. If you're doing it solo and trying to get your first multifamily syndication deal done, you should really consult a mentor or an experienced operator. That may save you a few headaches and possible the deal, So you want to make sure that you reach out to those resources. Now, there are alternate ways, however, for you to get your first multifamily syndication deal done, other than just going solo. One of the best ways to get your first deal done is to team up with an experienced sponsorship team and fulfill a role within that team that allow you to utilize your strength on the team, right? So typically, you'll be awarded a part of the general partnership team, and you can fit in there where your skill set goes to work in terms of, make the team to fulfill the role of the team. So the GP portion of the syndication model generally accounts for about 30% or so of the overall deal. So there are various roles that are given a percentage of the GP share. For example, at Cash Flow Champs, that 30% is broken down. And for example, if you do risk capital, it's probably 10% of the overall 30%. And then asset management is 20%, probably KP, that's another 20. We do capital raisers for about 30% and acquisition and due diligence for another 20. So, if you are good, for example, at capital raising, you can come in and you can fill that slot, right? You can fill that slot and you can be a part of that deal in terms of taking that deal down and be a part of the GP team. And that should be a huge win for you, right? So you don't have to just start out solo. You don't have to go that way. Again, you can find an experienced team, fill a slot there. You can, if you're good at asset management, look, you can come right in if there's a spot there and you can work that area. And that's a good way to grow as well. But I think one of the best ways of all in taking down your first multifamily syndication deal is to be a passive investor, right? Or an LP, right? A lot of people don't look at it that way, but they want to be on the active side. But if you can evaluate deals, and that's why it's so important to at least know how to underwrite where you can evaluate deal. And again, we can teach you how to do that on Saturdays at 4 p.m. You can go to the session by Charles Seaman, go to cashflowchamps.com/underwrite, and at least get some idea how to evaluate the deal. Because if you want to be on the passive side, which I think is sometimes the best side to be on, you can evaluate your deal. You can know you can vet your operators. You can vet the deal. And if you're able to do that and you have funds, you have liquidity, you have, probably money sitting in a 401k or, some different means that is not bringing you enough returns, and you want to bring it into real estate, then go ahead and learn how to evaluate a deal, learn how to vet a sponsor, and then you can put your money into those opportunities. And you don't have to be actively running the business in terms of executing the business plan. You don't have to be doing operations. You just place your money with good operators in good deals, and then pretty much sit back and just receive your mailbox money, so to speak. So you're receiving cash flow on a monthly basis as an investor, and you're also getting opportunity to on the upside. So when the deal is sold, then you also get a good portion of that as well. So that is a beautiful way to go, wherein you can just place your money in good deals with good operators. Don't have to worry about the termites, the tenants, or the toilets, but you're receiving cash flow and you also have an upside. Plus, you also can take advantage of real estate because the tangible asset where you can still get some, bonus depreciation or some deductions and things like that. Of course, you want to talk to your CPA about that, but you do have those opportunities that you can benefit from just by being an LP or a passive investor. So I think that really is one of the great ways. So there you have it. There are multiple ways that you can getting your first multifamily syndication deal done. Again, you can go solo, you can join an experienced team, or you can operate from the LP side. Another thing I have to say about the LP side is that it is good because most operators will offer they will offer you like you get a 7% pref or 8% pref, meaning that you get preferential, you get preference in terms of the cash flow that's coming off the deal. So even before the operators get paid, because you have a 7% pref or 8% pref, you get the first set of cash flow coming off the deal, right? So I mean, you are putting yourself in a great position wherein you're pretty much in the front of the line as far as cash flow goes. So those are the ways that you can get into your first multifamily syndication deal. I think that it's a great opportunity to do that. And if we at Cashflow Champs can help you in any way, shape, or form, just let us know. Again, just go to our website, reach out to us. You can just fill out the information there. We'll reach out to you, and we can see how we can help you there.